Intrinsic value. Hello guys. In this video, we will learn about intrinsic value. The concept of intrinsic value offers several benefits to investors who use it as a foundation for their investment decisions. Understanding and estimating the intrinsic value of assets can help investors make more informed and rational choices, contributing to successful long-term investing. Here are some key benefits of considering intrinsic value. 1. Identifying investment opportunities. 2. Margin of safety long-term. 3. Perspective disciplined investing. 4. Contrarian opportunities reducing. 5. Behavioral biases sound risk. 6. Management focus on. 7. Fundamentals higher confidence. 8. Long-term wealth building. 1. Identifying investment opportunities. Estimating intrinsic value helps investors identify assets that are potentially undervalued by the market. When the market price of an asset is significantly lower than its estimated intrinsic value, it may present an investment opportunity for those who believe that the market will eventually recognize the asset's true worth. 2. Margin of safety. Intrinsic value calculations often incorporate a margin of safety, a buffer that accounts for errors in valuation or unforeseen negative events. This cushion provides protection against the uncertainty and variability inherent in financial markets, reducing the risk of significant losses. 3. Long-term perspective. Focusing on intrinsic value encourages a long-term investment horizon. Investors who prioritize intrinsic value are less likely to be swayed by short-term market fluctuations, as they are looking at the broader picture of an asset's value potential over time. 4. Disciplined investing. Estimating intrinsic value encourages disciplined and systematic investing. Investors must conduct thorough analysis, considering various financial metrics and economic factors, before making investment decisions. This approach promotes thoughtful decision-making over impulsive actions. 5. Contrarian opportunities. Intrinsic value analysis often leads to contrarian opportunities, investing in assets that are out of favor with the market. By investing in assets that are temporarily unpopular or undervalued, investors can potentially benefit from future market corrections. 6. Reducing behavioral biases. Using intrinsic value as a guiding principle helps mitigate behavioral biases that can lead to emotional decision-making. Investors are more likely to stick to their investment thesis and avoid making rash decisions based on fear or greed. 7. Sound risk management. By understanding intrinsic value, investors gain insights into the potential risks and rewards associated with their investments. This knowledge enables them to make risk-aware decisions and allocate their resources effectively. 8. Focus on fundamentals. Estimating intrinsic value requires a deep dive into a company's financials, industry dynamics, and competitive position. This focus on fundamentals helps investors make more informed judgments about the long-term prospects of an investment. 9. Higher confidence. Investors who can justify their investment choices based on intrinsic value analysis often have higher confidence in their decisions. They have a clear rationale for their investments that goes beyond short-term market sentiment. 10. Long-term wealth building. The consistent practice of estimating intrinsic value and investing accordingly contributes to long-term wealth building. Over time, assets that were purchased below their intrinsic value have the potential to appreciate, leading to compounded growth. It's important to remember that estimating intrinsic value is not foolproof, and there are limitations and uncertainties involved. It requires careful analysis, thorough research, and a solid understanding of financial principles. As with any investment strategy, there are risks involved, and investors should consider their risk tolerance and conduct due diligence before making investment decisions based on intrinsic value. Good luck for the future. Thanks for watching.